Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Today, we're really digging into the sources you sent us, and they confirm a massive shift. Institutions, well, they're not just watching anymore. They are actively building out the core infrastructure of this space.
They really are. And at the same time, we're finally seeing the regulatory map get clearer.
And what's really striking is this deep global adoption, not just for speculation, but rooted in, real ethical long-term principles.
That's the perfect way to put it. So our mission for this deep dive for December 9th, 2025, is to just cut through that daily market noise.
All the anxiety.
Right, and focus on these huge signals of institutional trust. We're going to connect the dots between BlackRock's new move on Ethereum and, well, everything else. The regulatory wins, security, and how DeFi is actually being adopted across the globe.
Okay, so let's start with a macro picture. Because even though the story we're about to tell is, frankly, overwhelmingly positive for the long term, the overall market mood is still stuck in fear.
Yeah, that fear and greed index is just stubbornly sitting at 25.
It is. And the total global market cap, which has been flirting with that next big milestone, is at $3.15 trillion.
That fear metric can be a little deceptive. Retail sentiment, it's always going to be volatile day to day. The real story is the macro regulatory backdrop,
Which is providing some serious structural support.
immense support. The sources are all pointing to this positive regulatory shaping from the current U.S. administration, and you're seeing clear frameworks from the UK, from Japan, from the Middle East.
And that stability, that's what TradFi needs. It's the prerequisite for them to finally commit real capital.
Exactly. Which brings us to the top of our stack.
Okay, let's unpack that commitment, because nothing says institutional commitment quite like this. BlackRock has just submitted an S-1 application to the SEC for a new Ethereum staking ETF. Ticker is ETHB.
This is such a multi-layered story. For anyone who isn't familiar, the S1, it's the official starting gun. It's the registration form you have to file to list new securities in the U.S.
And the fact that it's BlackRock running the race, that is the headline.
It is, and it's especially interesting because, they already have the market-leading Ethereum ETF, ETH,
Which holds over $11 billion in assets. It's huge.
So why a separate one? Why launch a staking ETF if they could, maybe just add staking to the one they already have?
That's the big question on Wall Street right now.
It is, but regardless of their internal strategy, just filing for ETHB, that act alone has 6 very specific implications. And they're all designed to do one thing: boost institutional confidence.
Okay, let's walk through them. Number 1 is the most straightforward, just boosting confidence. How much weight does a move like this from BlackRock actually carry?
Oh, an immense amount. I mean, BlackRock is the largest asset manager on the planet. They do not dedicate resources to launching a product unless they have absolute rock-solid trust in the underlying asset.
Its legal standing, its technical reliability, all of it.
Everything. So by launching a staking product, they're signaling that Ethereum is strong, it's durable, and it's reliable enough for their clients for years to come, not just for a few months.
So it basically gives every other fund permission to jump in.
Permission and this is the second point, practicality. Easing access. The sources really hammer this point home. It removes the need for wallets or technical know-how.
Which is a huge hurdle for large funds, right? The compliance rules.
A massive hurdle. They're often just not allowed to hold crypto directly. But an ETF wrapper, it solves that problem instantly. Now they can get exposure to Ethereum and its staking yield right from a normal brokerage account.
No private keys.
No private keys.
And easier access, as we always see, that leads directly to the third implication, which is increasing demand.
Precisely. We're talking about trillions of dollars that were basically locked out of the ecosystem because it was too complex. Now that complexity is just gone.
So institutions can allocate more capital now that there's a simple yield-generating option.
Right, and this isn't just retail money. This is the smart money coming in.
And that yield part, that's the fourth implication, and it's so important. It highlights Ethereum as a productive asset.
This is so critical for the institutional mindset. They look at something like physical gold, which doesn't yield anything, very differently from a bond or a stock that does.
So this ETF structure, it actively advertises that Ethereum earns passive rewards through staking.
It turns it from just some volatile token into what they call a productive asset, something that generates predictable, ongoing income. And that lines up perfectly with the mandates of, say, pension funds or insurance companies.
Okay, so broadening out a bit, the fifth point is about tokenization.
Yes. Tokenization, putting real-world assets like real estate or treasuries on a blockchain, it needs a trusted base layer to run on.
And more institutional products built on Ethereum strengthens its position as the main chain for that.
BlackRock is essentially planting a flag and saying, we are building our future here. That just reinforces the whole trend of big firms tokenizing assets on Ethereum.
All right, but here's where I want to push back a little. If you make access this easy for institutions, doesn't that mean they have less incentive to actually adopt the underlying decentralized tech themselves?
Right.
Are we trading decentralization for convenience?
That is a fundamentally important question. And the short-term answer is yes, they are absolutely choosing the convenience of the ETF. But long-term, this move actually reinforces the sixth implication.
Which is strengthening Ethereum's role in global financial settlement.
Exactly. Those tokenized assets, like the $11 billion BlackRock is already managing, they need an incredibly secure and reliable chain to settle transactions on.
And why does a staking product, specifically, imply that trust in settlement?
Because staking means you're locking up capital for the long haul. If BlackRock is willing to do that to help secure the network, they're signaling a profound belief in the durability of Ethereum's infrastructure.
They trust it will be around and be reliable for decades.
It becomes the default settlement layer.
Wow. That analysis really underscores how significant this filing is. Okay, let's pivot from institutional trust to regulatory clearance and, maybe more importantly for you listening, to some real security victories.
Right, because that institutional trust, it has to be built on stability. And that takes us straight to a huge win for the tokenization industry.
You're talking about Ondo Finance. The SEC officially closed its year-long investigation into the company.
Yes, and with no charges filed.
So this investigation, it started under the previous SEC leadership, right?
It did, and it was focused on whether Ondo's tokenized assets, specifically their big U.S. Treasury fund, were unregistered securities. The stakes were enormous.
I mean, Ondo issues over 100 tokenized assets. That treasury fund alone is worth, what, $774 million?
So for the SEC to close the probe with no action, it's a very clear non-objection.
Or is it more than that?
Oh, it's much more. It sets a powerful precedent. Ondo sees this as definitive proof that the U.S. is becoming much more supportive of tokenizing real-world assets, especially after the shift in SEC leadership this year.
It's the regulatory clarity the entire sector has been waiting for.
Foundational clarity.
Okay, so institutions are getting clarity, but what about the individual? How is the technology evolving to protect our own assets?
For that, we have to look at the massive win for self-custody that we saw with the open-source mobile wallet, Nunchuk. They just revealed they are now safeguarding over $1 billion in Bitcoin.
And they do it using multi-signature protection. Can you break that down for someone who might just be starting to explore self-custody?
Certainly. So think of most wallets as having one key, like a single key to your house.
Yeah.
Lose it, you're locked out. If a hacker gets it, they get everything.
Right.
Multi-signature, or multi-sig, means you need more than one key to move funds. Say 3 out of 5 possible keys. You could keep one on your phone, one on device in a safe, and give a third to a trusted family member.
So it makes it dramatically harder for a hacker. They'd need to compromise multiple locations.
Exactly. And the proof of concept for Nunchuk's model, it happened in a very high-profile situation.
The Canada Freedom Convoy.
Absolutely. The Canadian government tried to freeze funds in Nunchuk wallets, and they couldn't. Nunchuk doesn't hold any of the user's keys, so they had nothing to freeze.
It was a real-world demonstration of decentralized self-custody versus centralized power.
A potent one. And they support things like inheritance planning, which is a huge deal for high-net-worth individuals and even institutions.
That's the power of the tech. But we have to acknowledge the other side of this, which is the increasing sophistication of scams. And we have a really sobering story out of San Jose that is a necessary warning.
It's a tragic story. It's an example of how human trust is weaponized. A widow in San Jose lost nearly $1 million to what's known as a pig butchering scam.
For our listeners who might not have heard that term, what exactly is pig butchering?
It's an elaborate fraud that starts by slowly building up trust. The scammer meets the victim on social media, in this case it was Facebook, and then spends months building what feels like a real relationship.
The fattening the pig, so to speak.
That's the grim term for it. And once that trust is established, they introduce a fake crypto investment platform with these incredible returns, and they just encourage the victim to deposit more and more until it's all gone.
The psychological manipulation is just chilling. And the way she finally figured out it was a scam is the really surprising part.
Yeah. She started getting suspicious, and she began asking ChatGPT a series of really specific questions about the platform, about the communication patterns.
And ChatGPT flagged it.
Immediately. It identified the situation as being consistent with a known scam pattern. But unfortunately, by then, she'd already lost almost everything. It shows the incredible potential of AI for scam identification, but it also just underscores the catastrophic damage these things do.
It's such a critical lesson. Okay, let's shift our focus now to global adoption, and specifically to a region where growth is just off the charts, the Middle East.
The UAE is cementing its position as a global virtual asset hub. The numbers are staggering. $30 billion in virtual assets moved into the UAE by June of 2024.
That's a 42% growth rate.
They aren't just adopting, they're leading. And they're doing it with a focus on ethical finance, specifically with a new bank called Ruya.
Which is the UAE's first innovative digital Islamic bank.
And this is a tectonic shift. Ruya is the first Islamic bank in the world to offer virtual asset investment services like Bitcoin, right from its mobile app. They're partnered with Facet for the secure crypto side of things.
The significance here is so much deeper than just convenience. It's about compliance. We need to understand why a digital Islamic bank offering Bitcoin is such a breakthrough.
It all comes down to Sharia compliance, or Islamic financial law. Sharia principles forbid things like excessive interest and also what's called gharar, which is basically excessive uncertainty or speculation.
And a lot of crypto activity was seen as violating those rules.
It was. But Ruya ensures that the assets they offer are fully Sharia compliant and secure. Their whole focus is different.
So not on short-term speculative trading.
Absolutely not. It is explicitly about long-term, responsible, ethical wealth building. By bringing digital assets into that system, they're legitimizing the entire asset class for a massive global population that demands these kinds of transparent, ethical products.
And speaking of that kind of leadership, Dubai is also focusing on AI and the climate.
That's right. The Dubai Future Foundation is holding the first International Green AI Conference in January 2026. The whole point is to use AI to achieve environmental sustainability.
So it's about promoting the ethical use of technology to solve real-world problems.
It's a very holistic, future-focused approach to tech adoption in the region.
Okay, from these huge macro movements down to regional growth, we've covered a lot of ground. But now we have to bring it back home to the immediate catalysts, the December 10th FOMC meeting and the CPI data release.
Let's ground this in some numbers first. Bitcoin is hovering around $89,860, down a little bit in the last day. Ethereum is at $3,161, also down slightly, but the key is its 7-day performance.
Right, it's up over 10% in the last week.
And that surge is being attributed to the Fazaka upgrade.
Correct. So what was the main impact of Fazaka?
Fazaka was all about network efficiency. It was optimizing data storage for layer 2s, streamlining operations, slightly lowering transaction costs, and that, combined with the BlackRock news, really boosted confidence in Ethereum's ability to scale.
Okay, now let's talk about a metric that should be on every trader's radar: stablecoin volume.
This is a key barometer for liquidity. Right now, Tether USDT volume is only at about $86 billion. If you look back at previous all-time highs, major pumps, that number really needs to cross 150 billion.
Because that signals a huge amount of dry powder on the sidelines ready to buy.
And we are just not there yet.
And a quick note on governance coins before we get to the FOMC.
Yeah, we saw a big reshuffle here. Hyperliquid is now leading the top governance coins by market cap at over $7.5 billion. That's way ahead of Uniswap, which is at about $3.4 billion.
So that shows a real shift in where influence and capital are gathering in DeFi.
It does.
All right, the main event, the FOMC decision tomorrow. What is the market anticipating?
The market expectation is crystal clear. There is a 90 to 99% chance that Federal Chair Jerome Powell will reduce the interest rate.
We're looking at 25 or 50 basis points.
Probably. With a lot of advocates pushing for the 50-point cut, a rate reduction usually means easier credit, more capital flow, which is historically a good thing for assets like crypto.
But, and this is the most critical piece of advice we can give you, the market does not always react to the fact. It reacts to the narrative.
That is the distinction you have to internalize for tomorrow. The market can completely ignore the factual announcement and instead react, sometimes violently, to the narrative spun by mainstream financial media.
So, for example, if Powell cuts by 50 points, which should be bullish.
But the media headline is that he only did it because the economy is secretly weak, the market could still dump. We saw this exact dynamic play out in December of 2024.
So what's the actionable advice? How do you prepare for that narrative risk?
You have to go to the primary source first. Watch the official announcement yourself. The Federal Reserve Board has a YouTube channel. Listen to Powell's actual words, his reasoning. Then wait, see how the major media outlets frame it a few hours later.
And that gap, the difference between the fact and the narrative, that's what drives the price.
That's often what drives the immediate price action.
Yeah.
And it lets you understand what's really moving the market.
A critical piece of advice. So, to wrap this up, we've seen this powerful confluence of positives. Institutional endorsement of Ethereum from BlackRock, regulatory clarity for tokenization, and strong ethical adoption from the UAE.
We have. We've also seen that the markets are driven as much by narrative as by data. So the thought I want to leave you with is this. If the world's biggest financial players are literally staking their future on Ethereum's durability, what does that tell you about the long-term viability of other layer ones, and how should that influence your own due diligence?
Something to think about as you explore tokenization and these new ethical models of finance we discussed today. That's all the time we have for this deep dive. We'll talk to you next time.